Is the future of insurance embedded? Philippe Knepfler, Chief Innovation Officer at Covéa Affinity, is joining us today to share his extensive experience on this question. Personalization of products and services has been steadily increasing in consumer popularity over the last few years. And ease of purchase is no exception. From managing partnerships to building new revenue streams, embedded has already revolutionized auto and more. And the future looks bright. More on this now from the man himself. Please welcome Philippe Knepfler.
Hello everybody, very pleased to be here. I hope you had a good lunch. Not too sleepy. I'm standing here, I just have, I think, 30 centimeters. If I go here, I've got the screen, and otherwise I fall on this screen. So I'm trying to just stick there. Did you notice that I was on time? Almost, which is kind of, yeah. And I'm French, which is quite unusual, right? So my name is Philippe Knepfler. I'm from Covéa Affinity. I'm the head of development, chief innovation officer, and I will be talking today about embedded insurance. Actually, my whole career, I'm not that old, but I've spent 17 years in embedded insurance. I know nothing about traditional insurance, to be honest, but I know very well embedded insurance. Covéa Affinity is the dedicated entity within Covéa Group that takes care of embedded insurance. Funnily enough, so we're talking about embedded insurance, which is a hot topic, but which is a very old concept. Covéa Affinity has been doing that for over 40 years. Our first contract was with Mercedes and Renault, and that was in the 1980. But it also goes back a little bit further. In the 1920s, General Motors made the first, to my knowledge, the first embedded insurance program offering motor insurance to their customers in order to facilitate the sales of their vehicles. So nothing new. What is embedded insurance? Very easy. It's the practice for a non-insurance company, travel agency, a car manufacturer, to distribute an insurance that is going to protect the good or the service that they are selling. Right? So we're speaking about embedded insurance, white label, B2B2C. It all relates to the same thing, basically, with a few nuances. Right, so what you need to set up an embedded insurance program, you need an insurer, obviously. This is what we do. And you also need a distributing company. Right? So what kind of distributing company will we find in that area? Typical examples are a car dealer, which will sell an extended warranty to their customer in order to protect the car against any breakdown. Typical example. Travel agency, who will sell a travel insurance to their customers in order to protect them against cancellation costs or medical issues during the travel. Or, other example, a phone retailer who will sell an accidental damage insurance in case you break down your smartphone. Right. What are the characteristics of an insurance? Actually, within the embedded insurance market, the products are very typical. They're not alike traditional insurance product. They need to have at least 3 characteristics. They need to be simple, they need to be cheap, they need to be standard. Simple because usually when you are within an embedded insurance program, you have very little time to sell the insurance. It must be straightforward, it must be very easy for the customer. So you cannot come to the customer with a complex product, with a lot of exclusions, with a lot of different warranties. You want to make it very simple so that he understands very quickly. What he understands very quickly will be purchased very easily. It needs to be cheap, because within that process, the customer did not come there at first to buy an insurance. He went there to buy a car, he went there to buy travel, he went there to buy glasses or a smartphone, whatever. So you won't make him buy something that is worth twice the price of the product. So it obviously needs to be cheap. And eventually it needs to be standard. The insurance program will be customized to the exact needs of the distributing company. So we will customize the insurance and all the aspects of the distribution insurance for, let's say, a car manufacturer. The motor insurance will be exactly adapted to his client base. Typically, for instance, the motor insurance for Tesla will not be the same as the motor insurance for Renault, because the clients are different, because the needs are different. But once you have set up the program, what you want to do is not spend too much time on explaining, offering various options, and so on. You want it to make it very straightforward. So it must be pretty standard for the customer. Having said that, as we will see later on, embedded insurance has spread over multiple sectors, multiple segments. But there is a kind of natural territory for embedded insurance. Typically, you will find embedded insurance for gap insurance, for travel insurance, for extended car warranty. So these three examples, most of the cases, you will buy that insurance within a B2B2C process. And most people will not find or go to a traditional insurer to get that type of protection, because it's just not convenient. On the contrary, there are a few sectors, a few activities where embedded insurance is not suited. In particular, if you have very high financial stakes, financial risks. So industrial risk, for instance, is not at all suited for embedded insurance, because high risk, and you need to personalize, to customize the risk analysis. That's not what we do, right? Right, so the market is extremely diverse. As you have probably noticed, you can find insurance, embedded insurance all over. It's very difficult to assess the size of the market. So I've put a figure here, right? Don't take it for granted. Be very cautious about figures. You will probably be able to find a completely different figure elsewhere. But you can still trust what I'm saying. Why 48 billion? So we have multiple sources from Brandberger, McKinsey, our own sources, and so on. So we combine that to have that figure. But the problem is with embedded insurance, you have no open source. There is no official source, contrary to traditional insurance, to get solid data. But what that shows is still, it is a huge market. And the market is growing. Also, interestingly, you will see multiple sectors of activity. If you try to kind of put a hierarchy in terms of what segment is the biggest, probably the automotive sector is the first sector, accounting for 25 to 30% of the embedded insurance market. Then you have got smartphones, travel, payment, and I'm losing one. Extended warranty for consumer goods in general. But these are, the big markets. You will hear a lot about cyber insurance, for instance. Typically, cyber insurance is a very small market. Hasn't yet proven business model. In Europe, we are not as mature as in the USA, for instance. So we're still trying to find the right way to sell cyber insurance. Also, there are huge differences from one country to another. So, for instance, going back to motor insurance in an embedded selling mode accounts for maybe 1% to 2% in France. So it's almost nobody buys a motor insurance at a dealer shop in France. On the contrary, if you go to the Nordics, most of the new vehicles are sold with a motor insurance because it is heavily subsidized by the OEMs. So you have to take that into account. These are just two examples, but there are many examples of that. Pet insurance. typical example. A huge penetration of pet insurance in the UK, almost nobody buys it in France. Right? Now, what's the trend for this market? One example, that's travel insurance, right? So in blue, the global estimate, and in pink, the estimate for Europe. As you can see, there is a huge growth for travel insurance that is expected for the coming years. We expect the market to actually double within the coming years. It is probably the segment within the embedded insurance market that is growing with the fastest pace at the moment. But still, we see a lot of growth in other segments. There are a few segments that probably have achieved a certain level of maturity. For instance, smartphone insurance, the level of protection today is pretty high. For instance, extended warranty for consumer goods like washing machine and so on, probably also achieved a certain level of maturity. But the overall market is still growing. And if you're listening to a few estimates, so again, for what it accounts for, McKinsey, Roland Berger, they have issued estimates about the growth of the market. So what they are saying is that in the coming years, embedded insurance would account for 25 to 40% of the overall P&C insurance market. I personally think that's too optimistic. That's probably too much. But still, I think it will account for a bigger chunk in the market than it is today. One question is, why is that market growing? I think there are four explanations for that. One very typical answer that if you ask the question to the people in the street, they will probably say, yeah, because it generates a revenue for the distributing company. Yes, obviously. It is the number one expectations usually coming from the distributing company. One example is Apple. Do you know how much the Apple Care program is in terms of turnover? It is actually the world's largest extended warranty program. And it's worth almost $9 billion. So that's bigger than most of our turnover, the turnover for most of the companies here. So yeah, it's huge. And I'm not speaking about the margin, because they have very little, they have a very small loss ratio. They are probably making something like 2 to 3 billion in terms of profit. But that's an extreme example, right? Obviously, distributing companies are expecting revenue, but not always, not always. One big lever for the growth of embedded insurance was technology. Definitely the big lever. For the last 10 years. Why that? Because actually, as I explained earlier, the key for success for an embedded insurance program is a very seamless customer journey to buy the insurance. As I said, the customer did not come here in the first place to buy an insurance, so it must be very easy. I'll show you an example later on. So that's really an important topic. Also, embedded insurance, or B2B2C, or Affinity insurance, whatever, has long had a bad image in the eyes of the consumers. To a certain respect, it was, I think, it was normal. I understand that. But things have changed, and there is a consumer survey that has been made by the Federation in France, showing that over the last 10 years, the acceptance by the consumer, so the willingness of the consumer to buy an embedded insurance has doubled over the last 10 years. So it shows that the level of awareness of the consumers is growing. They know, they are kind of expecting to be offered an insurance now. And last point is the growth, the development of subscription-based model, what I would call the Netflix model. One example comes from the automotive industry. In France, in 2022, of all cars sold to private individuals, more than half of them acquire the vehicle with a leasing. We expect that in Europe in general, within the coming years, 70% of the cars will be acquired through a leasing. And why is that important? That is important because it shows the shift from ownership to mobility usage of a vehicle. So it shows that the people are more interested in having a mobility service, which includes the whole range of services that they are expecting. They want now, within the monthly installment, to be provided with the insurance, with the maintenance, with the gap insurance, and so on and so on. So the mindset is changing, and that is offering more room for growth for embedded insurance. What are businesses, distributing companies, and consumers actually expecting with embedded insurance? Businesses are, distributing companies are expecting revenues, obviously, but not only. I give you one example. You may know Back Market, the company that sells refurbished smartphones. So they have spread over Europe and now launching their sales in Japan. In Japan, the cultural mindset is a bit reluctant to buy second-hand smartphones. So they are offering, with the sale of the smartphone, an extended warranty. And that helps, that facilitates the sale. That's the same example as I gave earlier with General Motors offering the motor insurance to their customers. It facilitates the sales. But if you go back to Apple Care program, okay, 9 billion is enormous, right? We all agree on that. But still, I mean, behind that, there is the idea that you keep the customer within the Apple ecosystem. Because if the customer has a problem with his smartphone, he will go back to the shop and have it repaired at the shop. So he will remain within the brand's ecosystem, which is one of the key elements of this program for Apple. Consumers, they are expecting a purchase to be very quick, very easy. As I already said, it must be transparent. Consumers are expecting a product that shows exactly what is being covered. They want as little exclusions as possible. And when it comes to a loss, they want it to be paid right away. And to be honest, if you look back 10 years ago, it was not that. The general terms and conditions were extremely complicated, and you have a low acceptance rate for incoming losses, incoming claims. Things have really changed. Cheap, okay, we already mentioned it. All right, let's go to one example. Let's say I want to buy a new smartphone. I go to my favorite marketplace just to have a look what I can buy. That's a true example, by the way. Okay, go to Amazon. I'm interested in that Samsung. Okay, I will take this one. I click on it. All right. Okay. Oh, would you like to add what? An insurance. Oh, funny. Didn't expect that. Okay, I want it. I click it. I click on it. Put it in the basket. Here are the prices. I paid all the information needed. Okay, done. That's it. I've got my IP, my general terms and conditions, all the necessary documents. That's a true example. I didn't hide anything. These are the true clicks I've made. So, right. That's a fantastic example. A fantastic example. It was quick, it was easy, it was completely embedded within the customer journey process. And while it looks absolutely seamless and very easy for the customer, behind that, it is actually extremely complicated to achieve that simplicity. And so this is why tech is absolutely crucial in the success of an embedded insurance program. So when now you are as we are, an insurance company. How do you achieve that? Well, I have to go back a little bit to the basics of embedded insurance versus traditional insurance. I've pictured traditional insurance as a straight line and embedded insurance as a tailor-made suit. First of all, what you will notice is that while traditional insurance is very simple in terms of ecosystem, you have basically 3 players, can be a bit more complicated, but that's the basics, right? You have the insurance company, possibly a broker, and the customer. If you go to embedded insurance landscape, that's much more complicated, right? Yeah, because everybody has a different position on the value chain, and everybody's taking a tiny portion of the value chain. Because things have gotten so complicated in the embedded insurance environment, it is so diverse that you need to specialize. And the portion that is allocated to the risk carrier is really dedicated on carrying the risk. So, yeah, I won't go too much. I'm already late. I'm French. So you have traditional insurance, selling standard products, direct distribution. They have the proprietary IT, one of the crucial points. Whereas embedded insurance, you have to put yourself in the shoes of the distributing company. So if Amazon is a distributing company, you have to stick to their process to bring the technology that makes it very seamless for the customer. So that's a big challenge. So this is why traditional insurance will typically integrate their solution, technology solution, while an embedded insurer will typically use an ecosystem. They will work with a whole range of different players to make that happen. So why is that so important for an insurance company to work with an ecosystem? Because it brings you the versatility that you need. As I said before, embedded insurance spreads over so many different areas, from cars to smartphones to glasses to cyber to travel to businesses. You can't have one single solution, right? Plus, we all know, I mean, we are a big, large, old company. My IT department is not as agile as an InsurTech or a specialized company. Yes, I assure you. So to have a state-of-the-art solution, better work with somebody else, right? Brings you it will offer you a better time to market for reduced costs. So now, having said that, how do you manage your ecosystem? Well, you have to take into account the geographic scope of your partners, the business lines, the capabilities, and basically you have to select the right partner, manage your ecosystem. You have to be solid on compliance because when you reduce at most your value chain, what stays is the control of the risk, the risk carriage, and compliance. Because legally you will always be responsible, so you have to take care of that. And you have to manage your data. Key is API. Obviously, you have to be API ready because there are so many flows of data that API is at the heart of a proper data management. Now, if we look at the future, what is coming next? Continued growth, I've mentioned it. Consolidation, there have been many players coming into the market. There are a few struggling with financial problems, and I think there are a few players that will probably disappear from the market in the coming years. And AI, I won't say much about that because you hear AI all the time during this conference. Right, so my takeaway, and that's my last slide. If you want to insure, focus on what you're good at. Risk carriage, compliance, legal, that's important. But work with partners that are better than you in claim handling and in technological capabilities. Manage your data, because that's at the heart of the system. Be API ready. And keep your costs to a minimum, because the most of the value goes back in the pocket of the distributing company. That's it. Many thanks for your attention. You have a good day.